Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold. ICE Brent crude oil futures. A third bullish white soldier yesterday and the first close, again, over the upper trend line, currently at 83.99 of the recent late November 2022 to date sideways triangle. And that's currently between 83.99 and 81 even. This triangle is highlighted in dark blue. I am having some doubts about this whole sideways triangle idea, prompted by the false breaks both above and below. I will stick with this idea for the moment, but be prepared for me to retire it, as I'm not altogether happy with it. In the meantime, we have a primary target X top side in the 93 even area, and a secondary harder to reach, probably much harder to reach target X1 in the 99.80 area. Looking above, we have as resistances the October 2018 high at 86.67 and the interesting 50% Fibonacci line of the November 2020 to March 22 move at 87.41. Now, in the midst of those two, we have the flatlining medium moving average, currently 87. Let's check it, 87.14. Now, looking below, we're looking below the upper trend line. We have the flatlining short medium moving average, currently 82.79. Then also the 61.8% Fibonacci line of the old 2014 to 2016 move at 81.86 before we reach the lower trend line of the sideways triangle. Now, so far today, an ever so small move higher, based, interestingly, on the very slowly rising short moving average, currently at 84.93. Spot gold. A third indecisive, if higher, spinning top pattern yesterday. I suppose you could call them bullish white soldiers as well, but I think that must be stretching the bullish incentive a bit too far, at least just yet. The reason I say just yet is that we should know either today or tomorrow whether the action since Thursday last week to date is a rare pattern called the falling three methods pattern. Usually something like 7 out of 10 times it's seen as a bearish pattern. The reason why prices have finished up each day since last Friday where they have is fairly obvious. It is a support on the closing basis of the lower trend line, currently 18.79, of the broken November last year to January ascending wedge pattern, which is highlighted in dark blue on my daily chart. This pattern has already achieved its primary target on the upside, but we still have the harder to reach secondary target X2 up in the 1991 area. This latter one I'm currently pondering as to whether I should retire or not. There's one other thing I want you to look at, and it's too close to call if this action has or has not occurred, is whether the rising medium moving average, currently at 17.76, has made a golden cross with the long moving average, currently at 17.75. This is a lagging indicator, but it is still an indicator. Now, so far today, a move up over the lower trend line, but only as far as yesterday's high, so far. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.